Hello. Hello, this is Charlie Tian, and I'm the founder and CEO of GuruFocus. Very glad to be here again. Hope you are doing well. And yes, let me know where you are. Jonathan, thank you from Romania. Thank you. Yeah, everyone, please let me know where you are. And I'm in Plano, Texas. The weather is great, actually. The weather here is perfect, and it's the best time of the year. And the outdoor is so pleasant at this time. Hello, Amit and Jesse, Carlos, hello from Spain. And I always love to see you all and love to hear from you. We know that the market is going up so much today, and the election was the presidential election. All the elections were done yesterday, and it was a long-lasting process and make everyone tired and nervous. But anyways, it's finished, and no matter you like the results or not, the market is up. The market is up so much today, and it's good for investors. Although it's harder to find deals, to find undervalued stocks anymore, but it's good for us as investors. And let me share my screen with you. James, can you make it full screen again? Can you make it full screen, please? Yes. That's what we need to have, please. Yeah. Yeah, no matter what happened, no matter what results we have, today we have an up market. And as always, when you have questions, feel free to ask in the chat box of the YouTube channel there. And I'll be reading all the questions. I will do my best to answer the questions. And we know that market is up so much, but let's review. And I think even before today's market, I was already thinking that the market is high. The market was high. And how about today? The market is even higher, of course. Let me share my screen with you, and let's share some thoughts. And feel free to ask me questions. Here I'm share my screen with you. What you see on the screen might be different from what I see here because this page, the home page of GuruFocus.com, can be fully customized. You can just move around all the components to where you want it to be. For instance, this one. I want to talk about this one, the valuation of SP 500, the GF value. And if I expand it out, you can see that at the current valuation, the current stock market is actually at the highest valuation, almost as highest valuation ever. Really, if you look at the valuation, it's almost at the highest valuation ever. If you look at the history of this chart, is about 20 years, 20 some years. And yes, the valuation is high. This is for SP 500. We have a similar chart for the NASDAQ index, and I'll show you there. Okay, let me go here. If you, okay, this is a NASDAQ chart. And if I expand it out, yeah, NASDAQ is similar high valuation, and the market is really high. The market is really high. And it's actually, although we're happy with the returns of the market this year, up to I think year to date, SP 500 has already gained like 24%, but the valuation is really high, which makes the future return lower, no matter who the president is and who is the president, doesn't matter, no matter who you support. And the future return will be low because the market is really at one of the highest valuation in history. That's where we are. And similar indicators like we have the Buffett indicator, we have explained this. I have explained this many times. And this is a ratio of total market cap over GDP. And if we look at this ratio is this yellow line here, and it's at I'm sorry, it's the green line here. It's more than 200% now. It's also the highest ever. It's the highest ratio ever. And if we consider the total asset of the Fed, it's even higher. The ratio is even higher relatively. So then if we use this to predict future market returns, it will be low. The future market return is low. And if we look at the the Shiller P ratio, it's saying the same thing. The Shiller P ratio is 37.8 now. And it's 41% higher than the 20-year average. The 20-year average was 26.7. And the future return, projected future return will be just 2%. And that's including the dividends. And if you look at the historical Shiller PE, this historical chart of last 20 years, and it was the only time it was higher. It was before the market crash, during the pandemic. Before the pandemic crash, it was 2000. I think it was 2001 December 2021 here. Okay, I'm sorry. This was this before 2022 market correction. Okay, now the P ratio, Shiller P ratio is at the highest level, and it was never this high. If I go longer history, and only the dot-com bubble time, the Shiller P ratio was higher than it is now. That's where we are, and it makes it hard to find future good investments. And also, I think with Donald Trump in the White House, and with his style of spending, his style of budgeting, and I think the future government deficit will be even higher, and the risk of inflation will be higher. Okay, let's see if we have any questions. As usual, as ever, and you can feel free to ask me any questions in the chat box, and I will try to do my best to answer the questions. Okay, I have a question from Jonathan. Okay, he said that I have some wins in my investment portfolio today after Trump, but also some loss. Okay, in renewable energy. Okay, I'm sorry. Okay, not sure what your loss. What you lost? Okay, why is gold down today? Actually, that's a good question. I start to own gold this year. I never had gold before. I start to have some gold, and I think gold is down. Gold is down. It can be related to the bond market. The bond yield is up today. The bond yield is up quite a bit today, and the bond is becoming more attractive because the yield is higher. And the U.S. U.S. debt treasuries are going down. Treasuries going down because the market thinks that Donald Trump will spending more, will issue more debt. So the debt treasury was going down, and so the yield is up. That can affect the gold prices. Also, U.S. dollar is getting stronger. That can affect gold prices too. I think those are the reasons. Okay, let's see if I have other questions. Do we have updates on platform in the pipeline? Okay, fleet capital management. Yeah, we are actually working on lots of things. We released the GuruAI last month, but we're still working on it. We're trying to make it better. Whenever you go to any page, you see there's an AI button here, AI icon here. You can always click on that. For instance, you can go to any stocks, Here in the case of Berkshire Hathaway, you can ask questions. Just click on this AI button, and you can ask question about Berkshire Hathaway. So we have some examples here. What is the GF value of Berkshire Hathaway? Summarize Berkshire Hathaway's latest earning call. Okay, let me click on that. Summarize Berkshire Hathaway's latest earning call. Let's see what we get. And the source of the information is from the transcript of Berkshire Hathaway. In this case, okay, I don't have actually the latest earning call. Okay, I'm sorry. Berkshire Hathaway does not do earning calls. Warren Buffett does not do earning calls. That's why it does not exist there. And how has Berkshire Hathaway stock performed in the last quarter? Okay, then let's expect some answers. Okay, Berkshire Hathaway stock has shown positive performance. Stock increased 10.5% in last 12 weeks. Okay, I give you the performance of the stock. Year to date gains 29%. Let me ask a question. What is the biggest or largest segment of Berkshire in revenue? Let's see how does it do. And basically, you can ask any questions here. It will search for the reports and also the transcripts. Okay, it says the largest segment of Berkshire Hathaway term revenue is the insurance segment, which includes revenue from insurance premium written in U.S., Asia Pacific, and Western Europe. Okay, let me continue to ask. How much is the revenue? How much is the revenue? I'm continuing to ask questions. So we developed this so that it can make your research more efficient. Make your efficient. Okay, it says okay, probably it answers the revenue of the Berkshire Hathaway was 452 billion, and also draw a chart for the revenue. And yeah, it did not answer my question, but misunderstood my question, I think. But that's how it works. If you make it more specific, it will be more helpful. Okay, I'll continue to fleet capital management question. Yes, GuruAI is one thing. And we have this month, we actually released an alert function here. If you come to any stocks here, there's an alert here. You can click on this here. You can set up all kinds of alerts on prices, on valuations, on P ratio, for example, if on new transcripts, new events like filings, new of this. If all these are not enough, you can click on here. You can create your own customized transcript. It's called customized alerts. And you can build your customized alerts. You can use for instance, you can set up alert with if the 1 year share buyback ratio is less than 1%. You can do things like that. It can also about dividends, about valuations, about what gurus do with the stock, and about insiders. If insider buy sell, you will receive alert for the stock, and you can receive the alerts in emails or in text, and it will also show up here if there's any alerts triggered. It will show up how many alerts were triggered here, and I think it's a very handy feature that you can use. That's something we're working on also. Another thing we're working on is we're working on the aggregation of your real portfolio from internet brokers, such as Fidelity, Schwab, Vanguard, Interactive Brokers, and we're working on that. And we should be very close to release that feature. We're almost ready. It took us a long time. There are lots of things involved, but I think we're close. Okay, those are some plans. And let me look at the next question. Carlos asking, I have a question regarding the DCF and the JF value. Sometimes DCF looks overvalued and the other undervalued. Look at today, for instance, Johnson & Johnson. Okay, let's take a look at Johnson & Johnson. And Okay, in our case, Johnson Johnson said it's modestly undervalued, but DCF would tell you it's overvalued. But in this case, I will say that I will trust GF value more. And this with DCF models, there are lots of assumptions. And our GF value model, it's more close to historically, at least it proved relatively more accurate. And DCF can be quite random for different stocks. It really depends on your assumption of future growth rate, the discount rate, and a lot of assumptions. And our GF value model, it's using the future growth, but also the historical valuations as a reference for future valuation estimates. So I think the GF value will be more accurate in this case. Okay. Can we now is asking, can I link to conference call audio under transcripts? Yeah, we can try to do that. We may not always have the data, but we can try to do that. Andre is asking, currently P price ratio filters in Scanner use 10-year. Okay, I think we got tickets for this, and it's in our pipeline. We cannot do actions as quickly as we want, but that's in the pipeline. And North continue to ask, can we see cash positions in group portfolios? Mostly we cannot. Mostly we cannot. Mostly the information is not available. But in Warren Buffett's case, I think we have it. Let's try. We correct them. We collect them manually. So I think in Warren Buffett's case, we do have that chart, a chart showing the different the weighting of cash and stocks. Okay, yeah, I think this is chart. In Warren Buffett's case, you can see that this green line is an equity portfolio. This yellow is a fixed income portfolio. And this blue line is a cash. And the cash he has is now more than $300 billion. We know that he has been selling Apple. He sold Apple again and again. He doesn't have much left. He still has $60-some billion left. And it's a lot of money, but to him, it's not that much. Yeah, that's Warren Buffett. We collect this manually, and it's a lot of work to collect this manually. So for most of the gurus, we don't have the data. And yeah, that's where we are. And let's see. Do we have warnings for companies that are at risk of non-compliance, like MSCI? Yeah, we have warnings. Actually, I think I did a tweets about this on Twitter account. Yeah, we have been warning SMCI actually from this evaluation. If you look at this evaluation, it just doesn't make sense at all if I expand this chart. And our valuation has always been warning for a long time that this stock is too expensive. Now it's coming back. It's actually coming back to where it should be. And I hope that our users have avoided those kind of mistakes. Also, we do have warning signs here. We have 3 severe warnings for it. If I click on that, if you look at severe warnings, asset grows faster than revenue growth. Well, yeah, this one you have to look into it. It may not be a big warning sign, but we do say that it's a possible manipulator of its numbers, accounting. And when you see this kind of earnings, you need to be careful. And we also told you it has poor quality of earnings. Poor quality earnings that means that earnings most likely are made up of accruals, not really realized revenue. Lots of times, maybe accounting-wise it's realized, but they didn't receive the money. It can be that kind of case. Yeah, and the warning sign doesn't mean that you cannot buy the stock if there's a warning sign, but you do need to look into each one of them, be careful, and so that you make informed decisions. But I think in SMCI case, super macro case, it was a hottest stock. I think it was the hottest stock this year. Last 12 months, it was the hottest stock, and went up 900% or something in 1 year. But the valuation just out of range. It's just so unreasonable. Our GF value has been warning it for a long time, and that's why I personally never touch the stocks as hot as Supermicron. It's too scary for me. Yes, Amit is asking, show me the alert again. Alert is actually for every stock. There is like a bell here. If you look like a bell here, and if you just put your mouse here, there's a pop-up here. It says you can add alert here. Click on that. You can add alert. You can enable all alerts, and then you can decide to receive just one-time email or receive emails on all the time as long as alerts triggered. If I just do that, and you can choose to receive email or text. The default would be email, so you always receive email. If I save it, if I save it for Supermicron case, it already alerts me like all the alerts are triggered. For all the alerts are triggered, and it will send me emails. But you can always edit it to uncheck all of them, and it will update. So it will update next time. So you don't need to worry about it receiving too many emails. Yeah, that's alert. Okay, what do you think of SPSC? I'm not sure what kind of company this is. Let's take a look. SPS Commerce business description, a cloud-based supply chain management service for retailers. Okay, sounds interesting, I think. So cloud-based chain management service, logistics. Okay, product fulfillment analytics. Okay, I think it sounds interesting. The business sounds interesting, and then in this case, I will look at I think GF score. We give it very high GF score, 99 out of 100. That's a very good sign, I would say. Although it didn't go up that much this year, but we give it very high GF scores. The valuation seems to be reasonable, and the profitability rank is high, and the growth rank is high, and I think it certainly looks interesting. It's a company, the business is very predictable, and if we look at the income, the performance, the chart, the business chart. Okay, the income, financial strength, and if we look at the business growth. Business growth very consistent. A company has a large amount of cash and almost no debt. I think it looks very interesting, and I may look at more about this company. And I wonder why it didn't appear in my screeners. But it's certainly interesting. One severe warning sign, let's see, faster than revenue growth, asset growth. Yeah, we may need to look into more about it. There's more insider sales. Okay, good sign. The interest coverage is comfortable, and it's unlikely a manipulator. This is different. This is opposite of SMCI. Operating margin expansion, that's always a good sign. The PB ratio, price book ratio, is close to 3-year low. That's good. Revenue per share consistent growth. The PS ratio also close to 2-year low. Financial strength very high. Altman Z score very strong. I think there are lots of positive things about this stock, and I will certainly take a look. It's certainly interesting. And does the company pay dividend? Okay, does not pay dividend. Yeah, that's okay. Yeah, top dividend search, it does not pay dividend. That's okay. And if you look at the chart, if you look at the P ratio, let me look at P ratio. The P ratio of last 10 years. Yeah, the P ratio last 10 years seems to be at a lower range. 87, which seems to be quite high, but it's a lower range of the historical P ratio. And our GF value depends quite a bit on the historical ratios. So that's why I gave it unreasonably undervalued stocks and valuation. But the stocks is certainly interesting and it's worth more checking. Okay, the ASML. Yeah, of course, we all know about this company, and it's like the mother of all the chips, semiconductor chips. Yeah, the valuation is low, relatively low, and of course, company has good growth, good profitability, great profitability. The risk might be the regulation, but I think long term it will be fine. I think it'll be fine. The risk can be the trade wars or valuations. Yeah, that's probably why the stock go down today. Even the general market is up so much because maybe there will be higher risk of trade wars with Trump in the government, Trump as a president, maybe. Peter is asking, how do we calculate GF value? As I mentioned quite a few times, GF value look at few factors. One is historical growth, historical growth, yes, future growth, and historical valuation. We use historical valuation as a reference and to decide the current valuations and to project future valuation with if we include growth, after including the growth factor as well. So in ASM factor here, it's undervalued. Okay, did we backtest Joe Greenblatt magic formula? I think many years ago, Joe Greenblatt published his magic formula at least 15 years ago. When it was published, I did lots of testing, and I think I created quite some portfolios. I think tracking portfolios to track it. Unfortunately, my feeling was that the performance was not as good as Joe Greenblatt claimed. That was my feeling, and especially the lots of low quality companies will appear from that portfolio, and I personally don't like it. That was my take. And then we didn't spend much time on that for last 10 years. So I think it's we have better screeners. If you want to look at our screeners, you just put your mouse here on the screeners. You can see like a lot of them. I personally like the good company ones, and if you just select that, you can see all the filters and what companies come out. You can see like Novo, Nordisk, and Home Depot, all these great companies. They all did very well. And you can also start from scratch on the screener, of course. You can start from scratch so that you can, if you know what kind of stock you're looking for. Coming to Joe Greenblatt has a feature that he ranks with a combination of return on invested capital and the earnings yield, and so that ranking is a combined ranking of two parameters. Because of that, we developed this my ranking feature here. You can add your customized ranking here. You can, if you just click on that, you can rank with the parameters you selected, all your other parameters like ROIC in this case. You can rank all of this and the combinations of different parameters, and also you can change the weightings of the different parameters. then you save it, and you can rank that for the screeners you develop. That's actually triggered by the Joe Greenblatt's magic formula. Yes, Andrew, we do have those ranking features already, and it's under my ranking here in the all-in-one screener, and it's also on the right side. There's this ranking icon here. Click on any of those, you'll be able to rank the parameters in all-in-one screener. Okay, what do I take about CELH? Okay, I did look at this company briefly. It's making sport drinks like Monster beverage, all those kind of things. Our GF score ranking is really low. The reason is because the company does not have long enough history. The main reason is the company does not have long enough history of profitability. It was losing money, then it started to make money. It did well during the pandemic. Now the growth slowed down. And the company has good financial, very strong financial strength. It has no debt. That's a good thing. And I think the valuation is becoming more reasonable now. And the valuation becomes more reasonable, but the growth did slow down. It grew much faster during the pandemic. Now the growth slowed down, and the company may be picking up growth again. And overall, I think I'm neutral on the stock. It can be interesting. This stock can be interesting. And we all know that lots of drink, sport drink company did well, like Monster beverage, like Red Bulls. They all did well. This case, stock looks very much undervalued, as because it's now much lower than historical valuation. And yeah, I'm not sure. I'm determined to buy it. I'm not sure. I still don't have enough confidence in it, Joseph. Okay, let's look at more questions. Carlos keep asking the value investment. So, what do NAV, EPV, or then capital impact growth intrinsic value of company versus market? It's great if we do some mega stocks. I think we do have all the calculations for all of those. We do have all the parameters for all stocks, as long as it can be calculated. We have it. Since Microsoft here, you have I think you have NVV, net current asset value, have earning power value, as projected, earning power value, project DCF. We have all of those here if you look at here. And the closest thing to the price is actually our GF value, which I prefer than any other. I prefer GF value in terms of the valuation to any other valuation methods. Okay. Then take question: is there a way we can see current historical market share of individual companies? Market share, I'm not sure. So market share of certain products? No, I don't think we have that number. We may have some number. We have the segment number. We'll have segment number like here during the 30-year financial page, but we don't have all of them. I'm not sure. For instance, if you want to see the market share of Microsoft or things like that, we don't have that. We do have like Walmart, for example. Walmart, maybe you're looking at the market share of Walmart in grocery, for example. We have some data, but not. Okay, it seems like we don't have that data anymore. Yeah, that we're actually working on this. We're working to retrieve this data from the reports. That's a new project we're working on. Sorry, we don't have that. Okay, Jonathan asked, what's really the story of PLTR? I don't know much about this company. I know it's very hot. I think it's a cloud-based service. It's getting really hot. The valuation is 200, P ratio 269, and it's far off our GF valuation here. If you look at our GF value chart, it's here. It's far off, and I will stay away from it. I will definitely stay away from it. I will not touch these kind of companies, although the trend seems to be getting better, but the valuation is just too much for me. And I don't know very much about it. Okay, thoughts on EVVTY. Why? I think someone asked about this company before. Evolution AB. Yes, someone asked about this company before. AB gaming and 15% growth, high net margins, no debt, dividends, does not look like a value trap. Yeah, I think I looked at this company before during our sessions when someone asked, and my conclusion was that everything looks pretty good. Yeah, everything does look pretty good. The company is, let's see, what I forgot what does it do. It's a provider of casino system, live and slots casino system. The company developed, a casino system. Licensed casino operators generate vast majorities revenue from Asia. Yeah, and although it looks good, but I don't like this kind of industry. And casinos, yeah, the house always makes money. The winner house always wins. Yes, they are the house, and they have huge profit margins. If you look at this chart, the revenue grow tremendously, but they have like 60% of net income profit margins, net margins. It's unbelievable. Yeah, I would say the parameter looks great. The growth looks great too. The P ratio is low, valuation seems to be low, but I don't know enough about this industry, and I don't feel very comfortable about the industry. If you're an expert with that, maybe you can consider. But at least the numbers looks good. Okay. More questions. Explain the difference between Guru filters, premium, and plus. Okay, my gurus. I think you're talking about like under the Guru trades here. Okay, this doesn't have a Guru trades person. So I come to Walmart, Guru trades here. Yeah, you're talking about the these buttons. We have premiums, we have plus, we have my gurus. My gurus are you can build your own guru list. For instance, these are some I built before. This is Goldman Sachs hedge fund list. And you can just, with that, you can just look who among that list, which companies are doing with Walmart, which ones are buying, which ones are selling with Walmart here. So you can choose different options. Growth goals, those are the goals I think, okay, maybe I just have very few number of goals there. And test group, that's how my goals work. And premium is the ones we mostly well-known investors. We have about 200 of them. So if you're a premium member, you're able to access the Guru trades and portfolios of those gurus. If you're a premium plus member, you can access every institutional investors trade in our database. That's different levels of access. That's the difference. Okay. Brainstorming asking, am I thinking to publish a new edition of my book? I'll give more thoughts about that. Yeah, maybe. I do have some new ideas. Maybe I should add to the book. Okay, Rafa is asking, any thoughts of bringing back interviews with top investors? Yeah, we are actually short of staff. We're trying to hire someone to do it, but we are short of staff now. The girl who has been doing it, Sydney, she worked with us for I think 8 years. She just had a baby, and she was married last year. Just had a baby this year, and congratulations to her. But I haven't been able to find a replacement for her. Um, yeah, that's where we are. I would love to actually. Um, okay, John's asking, Jeff value rank monster. Okay, Jeff value rank. Jeff value rank. Yes, if we look at Jeff value monster, I think you have a monster. That's monster beverage. Let's go there. And I think we explained it quite a bit. Quite a few times. The stock doesn't look that much undervalued, but it does have a Jeff value rank of 9 out of 10, which is very high. Because we found that if the stock is extremely undervalued, the future performance on average is actually not good. So you would, as value investor, you would think that the more stock is undervalued, the better performance it will be, but not. It's not the case. We did a lot of backtesting study. We found that if a stock is too undervalued, as measured by GF value, it does not do well. The best situation is actually about here. It's undervalued, but not that much undervalued. And it's the best place. That's why the GF value ranks here as 9 out of 10. And we explained it in detail here. If you click on this question mark here, if I click on it, there will be a long article appears. It explains in detail on how it works. If I click on that, yes, a new page appears, and then yes, it explains in detail how it works here about GF value rank, about the growth rank, about profitability rank, everything, and the backtesting results and the actually ongoing testing results. This testing results is all continually calculated every day. So we update the number here every day. For instance, here, the highest ranked does the best here, although it's not the most undervalued stocks. It's somewhere just like here, just like here. The stock's actually not that much undervalued, although it's undervalued. We rank it as a highest because our testing results showing that those kind of stock did the best performance over time. Okay, is there a future growth for last performance or type of strategies they use? For gurus, we do have some filters. If we completely guru list, we do have some filter. You can search by country, can search by guru tab, institutional mutual funds, the total value they manage, numbers of stocks they manage, the turnovers. That's all we have actually, because for most of them, we don't really have the accurate performance data. They don't release them actually. For most of them, they don't release them. And we also don't have an efficient way of collecting the data. So that's why we don't really have it. Okay, let's go back to Monster again. Trying hard is asking, yes, for most valuations right here, but our GF value give it undervalued. I understand, yes, for most of the valuation calculation is right, but our GF value, at least historically, the stock has been trading at about this line, this black line here. And that's where what our GF value is based. GF value does rely on quite a bit on the historical trading range. That's why the market, the market to me, although Warren Buffett and value investors were trying to find undervalued stocks, but general market, most of the times, if a stock is undervalued, there's a good reason for it. If a stock's traded at very high valuation, there's also a good reason for it. Most times the reasons are justified. And the market is actually very smart, not like you're the only one, or I am the only one who realized this stock is undervalued. Almost everyone else doesn't. So it does not happen that way. And the stock traded for a long time at a certain range, there's a reason for it. And so that's why GF value rely on quite a bit on historical valuation, and also we look at the historical growth and future growth to draw this line. That's the case for Monster Beverage, although it's all right for most of the others. If you look at the others, like net current asset value, of course, it's too conservative. And Graham number is very conservative. And Peter Lynch value calculation, it assumes a reasonable P ratio is 15. They always assume the reasonable value. Okay, I'm sorry. The reasonable value is not 15. It's the growth rate. In this case, it's about 16, 17 here, and so Peter Lynch value, since a reasonable P ratio for Monster should be 16, but historically, Monster Beverage never traded at even close to that kind of P ratio. If I here show you the historical P ratio of Monster Beverage here, and if I remove the chart, look at the historical P ratio of Monster Beverage. If you look at 20 years, the median value is about 30, 35. The last 20 years, it never traded at a P ratio below 20, almost never. So that's, if you think that the reasonable P ratio should be 20 below, or 20 or below, you'll never get to invest in this company. And it was never traded as that kind of valuation. So considering this, when we calculate the GF value, we do look at the historic valuation as a reference. And that's why we have this GF value here. Hope that it does make sense. It does make sense for you. And let me look at more questions. How do we classify the 144 for the most held portfolio? Classify the 140. I'm not sure. I don't understand this question. The most held portfolios here. I think you're talking about the model portfolios here. And I'm actually very, very proud of this model portfolio. This model portfolio was created in 2006. It was shortly after I started GuruFocus. And it was about maybe 1 year, a little over 1 year I created this. And it's rebalanced once a year. And then if you look at this line, this long, red line, it outperforms the market tremendously over the last 18 years. And this year it's outperforming again. This year it's up until yesterday, it's up 23%. Now SP 500 was 21%. And since inception in 2006, it outperforms about 3%, actually, 2.3% a year. And that it outperformed most of the years during the market, for the market. Okay, and I hope that it makes sense for you. If you look at the performance this year, the largest holding is actually Taiwan Semiconductors, then KKR, then Apollo Global Management. I own all of also Meta, American Express, Goldman Sachs, Amazon, Berkshire Hathaway, Google. Actually, I own all those stocks. And EPD, yeah, I don't own this. MasterCard and Moody's, Visa, Apple, United Healthcare. I own actually most of the stocks here. Microsoft, I own it. It doesn't do really well this year, but I still own it. One of the largest holdings. Okay, more questions. I see that Jonathan asking, what tech stack are we using for GuruFocus? I'm sorry, I don't know. And I used to program all GuruFocus myself, but that was many years ago. And our development teams now, they are the young guys, young people. They are much better than me in programming, and they have redone everything. So I don't really know what stack we use. Okay, Andrew is asking, would you suggest Jeff value for SP500 as indicator to increase, decrease overall exposure? If yes, what would be your approach? That's a good question. And Andrew is referring this Jeff value chart for SP500. And I think, okay, it really depends on situation. I think most of the times we should be fully invested or close to say fully invested. I think most of the times. And as long as your investment span is long enough, like more than 10 years, 20 years, I think most of the times you should be fully invested. And if you miss some market opportunities, yeah, and actually it's the biggest mistake one can make is try to time the market. But sometimes the market does get very overvalued, like it is now. And we may make some adjustment. I would say we may make some smaller adjustment, but in my case, I will still keep at least 70, 80% invested. I will never bring back completely cash because you never know what will happen to the market. Over the long run, it will still go up. So I think we should always be fully invested or close to be fully invested. That's my take. But I think this can be a very good reference. A market does look really overvalued right now. And market is optimistic with re-election of Trump. That certainly suppressed about half of Americans and maybe 90% of the world. But that is what it is. And we have to live with it. We have to still find opportunities to maximize our investment returns. And we do provide, GuruFocus does provide lots of tools to do that, for you to do that. And I do host monthly meetings here to answer your questions. Okay, and the question again regarding the current list is, the screen shows pre-select 144 gurus. Okay, probably talking about the aggregated portfolio here. Okay, selected. Okay, I see. Yeah, the select gurus. I think this is mostly. I think this is the premium gurus. Okay, the premium gurus. That's the premium gurus. That's the gurus which can be accessed by the premium members, and mostly they are well recognized investors that are well recognized by the market. They all manage a large portfolio mostly. That's why we select them as a pre-select list. And this list is different from what I use for the model portfolios. The model portfolio use only about 25 groups. Yeah, but the list actually looks quite similar. If we look at the top stocks look quite similar, and there's some difference, but the list is similar. Okay. Well, it seems like we don't have lots of questions, and as usual, I will be here on the first day of each month at 1 p.m. So next month it will be Wednesday, December 4th. It will be Wednesday, December 4th. Okay, I'll be here at 1 p.m. Central Time, and I would love to see all of you again next month. And good luck with what we have. Good luck investing, and invest in good companies only. That's always my motto. Invest in good companies only. Good companies only, and don't try to be lucky or invest in good companies only. That's my motto. Thank you all, and see you next month.